Hello and welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir and I'm joined as always by David Broomfield. And for this special end of year episode, we're joined by Amelie Sarrado, Director, President's Office of Christie's. Welcome back, Amelie.
It's wonderful to be back. Thank you, Sarah. Thank you, David.
Brilliant. Okay, now, Amelie, we normally do, last time you were on, we didn't do this, but we've introduced a new thing before we get to our main topic, which is we're going to be talking about the art market. We have a quick fire numbers round where each of us brings a number that may or may not relate to the topics we're going to be talking about this week. So, Amelie, as our guest, what's your number?
My number is 242%.
Ooh, 242%. I'm not going to guess that. David, do you want to have a stab at that?
It's clearly something, how much something is appreciated by. That's my guess.
Okay.
That's a really good guess, David. It's the percentage sold versus the price versus the low estimate. And this one is specifically related to a Cartier Tutti Frutti necklace that was sold in Hong Kong. And it sold for 242% of its low estimate. And the reason that's an important number, an indicator, is because it shows you how well it has performed versus the original benchmark price. And we always look at this in terms of a successful performance. It shows you the depth of the market, it shows you the desirability, and ultimately the success.
Oh, interesting. That sounds like one for my Christmas list as well. David, what about you? What's your number?
What's my number? My number is 99%.
99, okay. What's that then?
And this is something I came across the other week. I posted it on LinkedIn. I found it fascinating. 17 years ago, we spent collectively $1.3 billion on ringtones. Can you believe that? It was a $1.3 billion market. And
Why?
that market has declined.
Market?
Well, I'll tell you, it's gone down by 99%. And which is incredible, really. The thing I think is incredible is not only showing you how short a trend that was and how quick it just disappeared. $1 billion market effectively evaporated within a few years. What I think is amazing is there's still some people out there spending money on ringtones. It's not gone down 100%. It's gone down 99%. For bonus points, do you know what the top selling ringtone of all time was?
No idea.
I'm loath to say it was something called Crazy Frog. Listeners, do not listen to it. Do not look it up. It's a terrifying window into the past.
Exactly.
Come on, Sarah, what's your number?
Moving on. Well, mine does relate to this week's topic. My number is 100. 100, because 2024, and I hope Amelie will correct me if I've got this date wrong, it marked the 100th anniversary of the publication of André Breton's Surrealist Manifesto. And that's important because there are a number of very well-known, I think the top-selling painting this year was by a surrealist, René Magritte. So that's my
Sarah,
number,
you're
100.
Spot on.
Thank you very much.
Very good.
Okay, then. So we are going to be talking about the art market. So, David, I know you're going to talk about the sort of the macro backdrop, and you've been doing some research into sort of art in times of crisis. So that's your topic. But, Amelie, what do you want to sort of bring to the table as far as the art market is concerned? How are we going to split your topic into two sections?
I think we'll start talking about what it's been like for the art market this year. It's been a challenging year, but within that, there have been incredible opportunities for growth, and there have been some very positive stories within that. But I'll be very, frank about both, the sort of downside and the upside. And I think we can talk a little bit, just zoning in on the UK, on the impact of the changes in IHT and CGT, and then let's look into the future. What's coming around the corner?
Sounds perfect. Thank you. Brilliant. Okay, David, well, let's kick off with you then. And then obviously, Amelie, if there's anything you want to sort of add in, then feel free to. So yeah, David, macro backdrop. What art in times of crisis? Surely people don't buy art when, economies are in recession and things like that.
Well, I think that's kind of the point, actually. Yeah, they tend not to, but there's some weird trends that I found when I was sort of delving through this paper. So the paper that I mentioned it on the pod a couple of weeks ago. It looks at how the art market has behaved through these different periods of market volatility. Some of that volatility is geopolitical. It's been like the Second World War, for instance. Others has been driven, entirely by sort of the credit cycle. The financial crisis is the obvious example there. But before we get into that, I think there's a kind of interesting point that we touched on when we were talking about things like Bitcoin and other asset classes. There is a fundamental utility with art that's kind of almost agnostic of the cycle. Okay, it's it embodies this sort of cultural intrinsic value that if you buy it, you can stick it on your wall, and that's a kind of carried interest. It's a carry, effectively, right? Even though you can't assign a monetary value to it, there is a utility that you can get from it. But the paper looks at the art market during these periods. So you've got political crises, economic recessions, and then these periods of inflation. So what was interesting, there were a few things I drew out the paper, like during the Second World War, the types of art that held up really well were things that were really portable. So small pieces of art that people could literally take with them and leave the country. And then if you look at larger pieces of art or sculptures, it just, it was a complete opposite story. During recessions and financial crises, well, you saw, big slumps, particularly during the Great Depression. And in fact, someone I want to talk about in a moment, Maynard Keynes made a lot of money during the Great Depression by hoovering up various pieces of art, probably more money than he ever made out of equity investing. And then periods of inflation. So, the paper looks at art as a hedge against inflation. And that's complicated. There are periods where it works and periods where it doesn't. The actual numbers, I think, kind of say it all. If you look over the past century, art gives you, and this is the market on aggregate. There is, like any market that's idiosyncratic, there are parts of it that have done incredibly well, and then parts of it that haven't done well. But if you look at the market on aggregate, in real terms, it has an annualized rate of return of around 3.6%. And quite high volatility, actually, compared to other asset classes. So it holds its value ahead of inflation. It's quite volatile. There's a few factors that drive it. And then what I did is I looked at the financial crisis in some detail. The reason I looked at that is, A, it's a bit more contemporary than looking at the Second World War, and B, it was genuinely a credit cycle. I grew up on all these stories of, before the financial crisis, I grew up on all these stories of the last big kind of exuberant art cycle, when you had the peak of the Japanese property boom, and you had sort of, I remember hearing stories of people that were going for interviews in Japanese banks, and just in the lobby of a Japanese bank was like a Rodin sculpture that someone had bought, or there was some Rothko on the wall, or some priceless piece of art that, when you look at what happened after the Japanese property market, deflow or burst effectively. Art prices in those parts of the market, this paper suggests, fell by about 30%. The financial crisis, I think, was interesting because it was a credit crisis. And what you saw there is the high end of the market having much more resilience, whereas the low end of the market tended to sell off quite hard. And then the final bit in the paper I thought was really interesting. I'll be interested in our experts' view on this, actually, is about auction guarantees, because they actually came into play, and they have come into play a number of times when the wider economic conditions tend to get more volatile or more negative. Auction guarantees come in, which kind of reduce the risk for sellers and incentivize the consignment of sort of high value artworks, right? So auction guarantees, I won't go into like the detail of them. There's third party guarantees, upside sharing, loads of detail in the paper. But I sort of thought about this through the lens of an economic framework. And if you think about auction guarantees as options, they kind of resemble put options that we're familiar with sort of in financial markets. So the seller effectively sells a put option to the guarantor, ensuring a minimum sale price. And then the guarantor assumes that downside risk if the artwork sells below the guaranteed price. So I thought that was like really interesting. It's a really interesting sort of risk management strategy, and particularly if you're investing in that sort of high end of the market. There are issues, obviously, like there are in the traditional option space of principal agent problems, market signaling, but the behavioral economic side, I think, is really powerful. Guarantees can really affect, I think, bidder behavior in the same way they do with traditional options. They can actually end up attracting more bidders because, the minimum price sort of indicates the confidence in that artwork's value. So I think it's a really interesting paper, actually. I'd very much recommend anyone read it. And the other paper I read before I sort of get off my economics hobby horse was, actually a couple of essays. There's some books and essays you can read about Keynes, who I didn't know I mean, having studied economics now for decades, I didn't know to what extent Keynes was heavily involved in the art market and in the art community. He was very his close personal friends, his wife's friendship group were all part of the Bloomsbury group. He had famously had two Cézannes in his bedroom. He had two priceless pieces of art just, hanging off his bedroom wall. There's a couple of good essays to read that he's written, The Arts and the State from 1945, which talks a lot about his belief in the need for government involvement to sort of foster cultural enrichment, et cetera, et cetera. He was a huge patron of the arts, very close to the Bloomsbury Group. He made more money out of art investing than probably he ever did out of equity investing. And he viewed very much architecture as the sort of purest expression of art in society. I'm not going to dwell too much on Keynes. It's great Christmas reading for anyone that wants to go out and read it. Obviously read his essays, but there's John Maynard Keynes and the Arts by Donald Mogridge. It's a very good journal article as well.
The Christmas reading list.
There you go.
I mean, your thoughts on some of those points there that David raised, Amelie?
Well, first and foremost, I'm impressed by the prep, David, that you've done. Very impressive. And you've touched on so many things, but that are really interesting. I'll pick out two just to narrow that down. The first one is what you said about art being transportable in times of war and difficulties, and actually specifically jewels. That's really, really true of jewels. And there's a tribe in the Nepalese border with China that live by that. And they actually, it's an agricultural-based economy. They go out into the fields. But what's notable is that the women working in the fields are carrying, strands and strands of turquoise and coral jewelry. And it weighs, multiple, 10, 20, 30 kilos, but that's their entire wealth they carry with them, so that in case there's a warlord that comes and attacks them that day, they're ready to run with their entire wealth on them. And I've always thought that is quite a powerful story for how the world sort of is interconnected and survives, and the role of art and jewelry within that. The second thing, David, is guarantees. It's such a hot topic, but it's come a long way. We started doing guarantees, about 10 years ago. And at the time, it was very much perceived that it was a negative imprint on a painting if it had to be guaranteed. It meant that there wasn't the seller confidence that it could sell. And that couldn't be less true today. Now it means that there's interest, that somebody believes in that and believes in it so much that they are effectively buying the first bid. They want to guarantee that they have that bid. There's obviously the risk aspect to it, that we're taking it, the vendor has the confidence that it will sell. And especially in a world where now every auction record is made public and the internet can, we can quickly check the record of any painting that's sold. That's become really important. And I would say nowadays in an evening sale, easily 20 to 30% is guaranteed, either before it is confirmed and signed up for the sale, or it's confirmed and signed up to the sale, and then we sell off the rest. So it happens on both ends.
And how much of that is just now a feature of the market, a structural feature of the market, or how much of that is because of perhaps uncertainty and the kind of exogenous factors, like where we are in the economic cycle, the geopolitical risks, things like that? It's both.
It's now, people who guarantee can make quite a fair sum of money in just one evening. So that's just become part of the process of selling at auction. But we see that the number of pieces guaranteed go up in times of uncertainty in the market. And that's because people on the selling side, and this has been the challenge that we found this year, is that with lack of confidence in the market, it's not that there hasn't been any money to spend, but people haven't had the confidence to spend it. And so the only way they will agree to selling a work of art without really needing to is the guarantee that it will make a specific price.
Which actually brings us then very neatly, Amelie, to your first point, which was the kind of the state of the art market this year. I mean, equity markets have been incredibly strong this year. It's been, especially if you look at US equity markets. But if we look sort of leading on from that point you just made there's been quite a bit of uncertainty this year still, and we've had geopolitical events as always every year. But does that mean that clients have had the money to buy art, but they've been slightly hesitant about really sort of going all in for some of the really big pieces this year?
I think that's definitely part of it, and true. There's also been a lot going on in the world. It's been an unprecedented year of elections, and people's mind has just been on other things and waiting to see the dust settle. And the third factor I would add into that is, if you go back 2 years, we had some extremely strong collections hitting the market. The Paul Allen collection, the Maclo collection, and Paul Allen's collection sold in one night for $1.2 billion. That's the highest ever sale. And that means it takes out some players in the art market because of the prices, but it also pushes up everybody's expectation of what their own painting is worth. And the fact is that not every Magritte, not every Monet is painted equal. They're better ones than other. But even in a time like this year, where there's certainly been a recalibration, a healthy one, I think it's necessary for the art market to recalibrate its prices and expectations. Even then, where you see the strong results is in the masterpiece level. A masterpiece of an artist will always hold its value through good times and bad times.
Yeah, because the number one selling piece this year, I mentioned my 100th anniversary of the Surrealist movement, was René Magritte's L'Empire de Lumière, excuse my terrible French accent, which sold for, was it $121 million? And in fact, I think, if I'm correct, there were 2 Magrittes in the top 10 paintings sold this year, weren't there? So it was a good year for buying Surrealist or selling Surrealist art. So, and actually also you talked about expectations for sellers. I was reading a piece the other day, William, there's a tendency, what's called the endowment effect, where owners tend to overvalue personal possessions. And I guess if you're seeing really high prices, that's going to reinforce that tendency. So is it fair to say that it's been a difficult market for the art market the last 2 or 3 years? And aside from these really big high profile events like the Allen sale, which I was reading about, which was 2022, wasn't it? That the total sort of value of art being sold has gone down. Do we feel, I mean, I suppose we should come to this actually when we talk about the future, but what's been driving that? It's been a little bit of uncertainty. It's been some big sales that have drawn a lot of buyers out of the market, or perhaps raised unrealistic expectations among sellers. What else has been driving that? Can
I add to that, Sarah, and just ask, to what extent are there regional differences as well? Like, is it, there are clear periods, I think, in art history where demand has come from one particular region. Is that the case today?
It used to be so clear. For a time, it was the Russians, and then it was very clearly the Middle East, and then it was very clearly China. It's still the case. It's true to say that China is less active. It's much harder to get money out of China, and that has had an impact. But people are still investing in Hong Kong as a major hub for the art world. So short term, yes, that's true. There are regional differences, but long term investment shows that there is confidence in regional markets like Asia and in the art market as a whole. If you had to pin me down to say which region has been most active this year, it would have to be the United States. And that again is, they have a strong economy, and they also have the baby boomers who are coming to the end of their life cycle. And so you have major collections hitting the art market. And that's how the Empire des Lumières, the Magritte Empire des Lumières, reached the market this year. It came from the Mika Ertegun collection. It had that specific painting had been in her collection for 60 years. So it was fresh to the market. It was a large-scale painting, a masterpiece of the artist. And we happened to know that there was somebody who'd been waiting for over a decade for that particular painting, and he guaranteed it. So, you can see how all of these things, none of these things happen in a vacuum. They're all interconnected.
Yeah. And obviously, I guess you touched on the fact that we've had elections this year. Presumably now that the US president election has been decided, we've got a clear result, we're going to have a smooth transition of power. I'm assuming that will instill some confidence in buyers, that they'll go, right, we know the path forward now from a political point of view. We can then focus on what we want to focus on. Let's think about investing in art again.
And I think that's true beyond the art world. I was speaking to a lawyer linked to an estate, and he said ahead of our UK elections, saying the worst thing is the uncertainty of not knowing. Once we know, no matter how bad it is, we can plan for it. And that's been true with the changes in inheritance tax and capital gains tax. Now we know what to do. It's difficult for many people. It hits them at almost the most personal level possible, but we know what we can put in place to try and mitigate it, plan for it. And for us in the art market, it's creating a number of opportunities for valuating works where people need to raise some cash.
I mean, sorry, Sarah, I was going to say, if you take Keynes's approach to investing in art, it's in these periods where he made all his money, in these periods of uncertainty. I mean, in that essay, I was reading his when he bought Still Life of Apples in 1918. I think he bought it for around like £300 or something. Don't quote me on that number. And this is the painting he famously sort of hung over his bed. He actually left it under a hedge while he was traveling. And then came back to pick it up a couple of days later because he couldn't carry this thing. So I think, but the point is that it was in that period after the First World War, and in those sort of interwar years, where in those periods where there were uncertainty, and in the Great Depression, where he would go in and pick up pieces. Because to your point, it's in those periods of uncertainty, I think, where you, if you're going to look at it as an investment, that's where you get your deals.
You talked, Amelie, you touched on the subject of IHT and CGT, and obviously we don't give tax advice and need to know. But are you seeing that then having an impact on the British art market and how British owners are perhaps thinking about what they have in their collection and how that might be used in the future to sort of mitigate some of the changes to the tax regime?
Look, it's very early days to say, but yes, what we're finding is that we've got an increased demand for valuations where we just simply go in and say, in this current market, this is what this piece is worth. And we encourage people to do that on a regular basis. It's just good practice to know what's hanging in your house. I would also say that it's had an interesting effect in terms of the work I do with family offices, where we say, start collecting now. Because for your children, because you can build for them an asset that in due course they can raise cash for, and you never know what's going to happen, but you know something will happen. And so it's creating, back in the day, people would go on their grand tour and bring back, treasures home. And that haul of treasures now is being used by the great estates, impacted by inheritance tax, to sort of raise the cash necessary. And that example is being used a lot right now in order to future-proof future generations as well.
Okay. So we've discussed a little bit some of the fact that perhaps the value of paintings, the total value of paintings sold has been slightly in decline. Although I did see that one of the specialist shipping companies are reporting a stronger pickup in Q4. And I guess that's an early indicator of what things will be like next year. But what about other things that are kind of not art in the conventional sense, but perhaps things like classic cars? I did an episode with Simon Kidston earlier in the year where we looked at classic cars as an investment, or jewels, things like that, luxury goods. Are we seeing that market sort of holding up well this year and is seen as an alternative to sort of conventional art?
I think there's always an alternative. And in fact, even with sales declining, auction sales declining this year, Christie's has invested long-term, and we've invested in two areas. One, acquired a commercial license in Saudi, but we've also acquired Gooding & Co, the auction house, classic car auction house. And that's just an indicator of where we think the market is going. And we believe that these are really strong markets to be in. But going back to your point, I don't think it's not so clear cut to say the luxury world has been particularly resilient. It hasn't been, but pockets of it have been. You know, if you are after Birkin bag, and I know that's a favorite subject of this podcast, but if you're after a Birkin bag and can't get it in the store, suddenly in the secondhand market, its value, if it's available for purchase, its value can go up and exceed its value on the primary market. And that's true of jewelry as well. The Cartier Tutti Frutti necklace I alluded to at the beginning of this is exactly an example of that. The 242% on its sold price versus its low estimate is actually higher than its retail value. And that in a year where the luxury market has declined by 30%.
So I guess that reflects a scarcity in new, and the people are then going, well, I can't wait for this. I want to buy this. I'm going to look for it on the second-hand market. I mean, it's a bit posh for second-hand, but yeah, that's yes, the principle.
Okay. Exactly.
So I guess before we move on to sort of the future, is there anything else we need to sort of think about for what's kind of been sort of key themes for 2024? Otherwise, I would suggest then, the piece I saw about the fact that shipping companies are reporting a stronger pickup in Q4. What sort of looking forward then to next year, and what's the sort of outlook for 2025 and beyond as far as the art market is concerned?
It's interesting what you should say about the shipping companies, because the pickup they've seen at the end of 2024 is actually, I would bet, will have started after the US elections. Yeah. And that then takes you on to next year. And there was one painting that really shows that potential growth and the small green shoots that we're seeing. And that's the sale of Mauricio Catalan's Comedians, because we know that Trump elected, cryptocurrency jumped in value after his election. And Justin Sun, who happened to buy Mauricio Catalan's work, paid for it in cryptocurrency. We don't know which one, but the point is all of these things, it's not a coincidence that happened. That painting could have absolutely, not sold had Kamala Harris been elected. It is possible to say that. And so with that, I think we might see in 2025 more of an interest in the digital art world, which had actually been dormant and really had going down over the past few years. And then I think we'll see a shift. I'm curious to see. We know there's a change in taste for art. We don't know really yet where it's going to, but I think we'll start getting a good indication of it in 2025.
So are we saying then that perhaps NFTs are going to be becoming more popular again, because they were the big thing a couple of years ago? Everybody was talking about NFTs. They seem to have sort of gone very quiet in 2024. Could we see, with a kind of perhaps a resurgence in cryptocurrencies, could we see more interest in NFTs again, non-fungible tokens for those that are not in the know?
David was saying earlier how volatile the art market can be. I think NFTs take that to a whole other level. So I expect it will remain volatile, but given where it was over the past 2 years, I think it is fair to predict that there'll be more interest.
I think that's the parallel for me. I mean, I am not an expert on this industry, but there does seem to be, you can be a kind of value investor in art. You can go for kind of more speculative kind of growth type investments, like the kind of trend following that we've talked about a lot on the pod in financial markets. And NFTs to me very much look like the latter. They look like a trend, right? And that can, what's the saying? The trend is your friend right up until the end when it bends. And I'm not going to finish the year laboring my skeptical views on all things crypto, but it feels to me like a more volatile end of the market. Perhaps that's the diplomatic way to put it. Whereas if you're talking about, a grandmaster or something with huge provenance, then I think the value investing kicks in, and it just feels a more stable market to me.
I guess my other question for you, Amelie, would be, one of the other topics that David and I have talked about a lot this year has been artificial intelligence. And I've seen one or two sort of articles about AI art. Is that something that we could see being a trend for 2025 and going forward?
It could be. And again, we're talking about how everything is interlinked. If the public domain is interested in artificial intelligence, that feeds artists, that feeds creativity, and that in itself will feed its output and rise. I was talking to a Belgian collector who collects digital art, and it's worth remembering that NFTs and AI art, those are parts of the market of digital art that sits above them. There's subcategories. And this Belgian collector is otherwise a very traditional collector, flat art paintings. And I was curious to know why he's branched out into this. And he said, because it's a reflection of our times. And so, which I thought, he's interested to know what people are innovating in. But importantly, the ecosystem of digital art as a category is very important to establish if it is to go, as David says, from a very speculative part of the market to a more established part. And I don't think that ecosystem is established yet. It is being established, and I think it has a future as a result.
Okay, that's interesting. I guess the other thing would be, again, something else I was reading about this week when we were sort of preparing for this was perhaps another innovation was using different exhibition spaces. And I saw that there is an Airbnb that's being used for, not for old masters, evidently, that would be a little bit too expensive, I think, to do that, but sort of for emerging artists. So I guess, are we going to see maybe more of this sort of alternative exhibition spaces for art as well, to bring perhaps sort of innovative or new artists to the public attention? I mean, Airbnb is one thing, but maybe there are other kind of alternative venues for art.
It's incredible what people who don't have much of a budget can do. And I always admire that. That creates innovation, cool new ideas. So of course that's possible. I think it also is an indicator of just how tough it is for young galleries and young emerging artists to really establish themselves in a way where they can survive off their chosen interest, and the fact that the government keeps cutting investment in art is a real shame for that, because not everybody is born with a mathematical brain, and that needs to be supported further.
Yeah, I guess then so we're saying then, if we're talking about 2025, we're saying so digital art, which is going to encompass NFTs and AI art as well. We might see that we're not writing it off yet, because it's very much in its early stages. It needs an ecosystem to support it, and that hasn't fully developed yet. But certainly there are some sort of more traditional investors in art who are looking at digital art and considering it as it's part of the future, which I think is interesting. What do we have any, thinking back to the Allen sale from 2022, do we have any big sort of high profile sales that people are waiting for in 2025? Have we got any big pieces coming up? I mean, we talked about the Magritte, that was the highest value piece sold this year, that somebody had been waiting 10 years for and had been in the private collection for 60 years. Are there any expectations for some big high profile pieces coming up for auction in 2025?
If they do, they'll come from the States, because that's where these great big estates are really coming from. But it's hard to talk about things that haven't been announced yet. We just announced the Jeff Beck collection of guitars that we'll be selling beginning of February. And I think that's interesting because memorabilia and provenance are have always been important, but people are so interested in the storytelling aspect of paintings, of objects when they come to the market. And that storytelling, don't underestimate the impact that has on the art market's performance year on year.
And I think also, when we were chatting before, you mentioned the importance of philanthropy as far as these big auctions are concerned. It's very important that when a piece is sold, that it's not necessarily just for the benefit of the seller. There has to be a wider benefit for society as well.
Absolutely, and precisely because governments are cutting, funding in art, the world then turns to the private sector for further funding, and therefore, people are selling works to benefit their chosen set of charities. And that's exactly what Paul Allen did. All of the proceeds of the sale of his art collection went to his foundation, and slowly over time that then gets distributed. But again, inversely, when I work with families, we often think, well, if they know that they want to start a foundation in 10, 15 years time, that's an objective that they have, start collecting now, because art is a great vehicle to raise funds for philanthropic causes.
But I guess final thoughts. I mean, we've talked a lot from a sort of monetary aspect from art. And I know when you were on before, you had some fairly forthright views on art as an investment. Just your thought on art as an investment, and how anyone thinking about art as an investment should perhaps just take a step back and sort of just set realistic expectations for themselves.
If that's what the objective is, and it's not a black and white thought process. You can love a painting and buy for pleasure and passion, and also in the back of your mind for an investment. So that's why it's a hard topic to sort of have an opinion on and sort of pull it apart into extremes. It's not that. I don't know anybody who well, actually, I know one collector who's only purely passion, and that's because he collects something extremely breakable. So it is really about the passion. But that aside, if you are really interested in put weight on the financial aspect, investment aspect of it, think long term, because again, it is a volatile market, and where we have seen the best returns has more often than not been over 20, 25 years, which happens to coincide with the cycle of a collector. 20 years collecting, and then there's a pause, and then they sell.
Yeah. Thank you, Emily. Final thoughts from you, David?
No, I think it's been very valuable having Emily on the pod. For me, I always think when it comes to art, the pieces that we've bought around the house, which are nothing that would ever go across Christie's desk, are all things that we love. They're things that actually, although there is obviously a monetary value that we assign to them. And in fact, some of them might even sell today on the secondary market. We'd never sell them. They're things that we cherish. So each of them has a provenance, has a story. And the piece, and while I just sort of share a little bit of sort of autobiography, the pieces that we've bought recently actually are sort of Inuit art from First Nations peoples in the northern latitudes, which with global warming, it means whole communities are just not going to exist in the same way of life. And a lot of these peoples paint ways of life and scenes and emotions that are very important to them right now. And that's a culture that's just not going to be here in 20 years' time because of global warming. And it's an art supply that's only really been around just over 100 years since Western materials and art tools and paints and pastels and pencils became available to them. So I think we'll look back on it as a period so short and so profound because of its implications. Anyway, that's my final thoughts.
Thank you very much, Amelie and David, for joining me today. A reminder that the views expressed in this podcast are not intended to constitute investment advice, are accurate at the time of recording, and are subject to change. Thank you for listening. Thank you for listening throughout the year. We're going to take a little break over the Christmas period, but we'll be back in the new year with more Need to Know. Until then, bye for now.